Hey guys, and welcome to the Working Money channel. For 2 years, XRPL Labs has collaborated with other entities with a track record of building on and supporting the XRPL ecosystem, guys. This coming from Vin from XRPL Labs. He said today, and this is a pretty big announcement for them, today together we published the white paper for XAO, an XRP ledger protocol chain. We're proud to publish the XAO white paper alongside GateHub, Alloy Networks, and Evernode and others. We believe that this is the best, fastest, and safest way to get the hooks amendment, okay, so the lightweight smart contracts for the XRPL protocol out there. Now we can shortly start building all the things we have envisioned for everyday life utility powered by the XRPL protocol. We will continue to build for the entire XRP ledger ecosystem, and everything we build will be open for the entire ecosystem to benefit from. We believe multi-chain XRP ledger protocol ecosystem can bring both the proven resilience of the XRPL mainnet and the endless new possibilities of hooks. Once the XAO network is fully live, some wallet will obviously be updated to support multiple XRPL protocol networks like the XRPL mainnet and XAO. We're one step closer to realizing our vision on the XRP ledger protocol, finding its way to actual everyday retail adoption. And guys, this is what's going to get utility up for XRP. All these developers producing so many different visions of where they see the XRPL going and, building upon each other's ideas. Hooks has been one of those big ones that is going to be able to compete with other smart contracts. So this is going to be huge, guys. Wanted to thank Vin just for sharing that with us today. Today, I also got this email from BitRu, and, every so often they do update their users on XRP Interest, considering it's one of the coins that is most supported on the BitRu exchange. I do have an affiliate link in the description of the video if you guys are still looking for an exchange to sign up to. It's also the exchange that I'm using to trade cryptocurrencies on my Patreon. So, the other thing is they do offer a wide variety of coins and a lot of XRP pairs too. Anyway, here's what they said. In the past week, we've seen a huge increase in our customers' interest towards XRP. So we wanted to share a few interesting pieces of data with you. Just giving us some of the recent statistics here. Okay, so notional open value interest, we have seen it creep up a little bit as of the 27th of August, which was just yesterday. It had been declining a little bit. We did see, of course, a lot more interest near the middle of the month. Right now in our futures service, BitRu users are holding over 125 million USDT of XRP, and our data shows that 88% of users are long on this asset. So that definitely has not changed. Short interest is obviously quite low compared to the long interest. As a result of all this increased interest, XRP to USDT became the fastest growing trading pair in futures this week. If you're holding this asset or planning to soon, please pay attention to the risks and properly manage your assets. Of course, this coming from BitRu, so wanted to thank them just for giving us this insight on their XRP holdings every so often. It is good to know where the exchanges are obviously seeing the trends, because that can give us a bit of an edge over what we decide to do. But of course, XRP always been popular. Mr. Man here on Twitter posting this, a KPMG talk with Marcus Treacher of Ripple. How to keep a highly regulated bank infrastructure in compliance and release trapped liquidity. Now, this is an older interview, but guys, it's coming at a time when we're seeing increased adoption. He retweeted it out with Cypress Domanicore's tweet here, fresh off the press, courtesy of Cypress research team, The Bridge to the Future. I'm going to get to that in a second. First, I just wanted to play this clip. The Internet of Value, Marcus Treacher from Ripple, discussing this. Listen to this.
The trade-off between innovation and stability within the global payments ecosystem is really about making sure that as you're developing new technology, as you're looking at new ideas, you are proving them and you are working on the ground with existing technologies, existing banks and payment companies, and kind of making the journey between creativity, which is very much a blue sky exercise, and the hard work of implementing change within existing networks and banking systems which are highly regulated, very carefully controlled. It's that end-to-end that's very, very important. The world has a very big liquidity problem today. What's happening is that companies and banks have to maintain trillions of dollars in overseas assets around the world to fund these very slow-moving, high-value, quite low-volume payments that are moving around day to day. And that creates an enormous drag on the global economy. It's tied up capital, it's tied up money. Now, we think we can solve that problem by rethinking how liquidity is delivered to the end user. To do that, we are developing solutions around digital assets. So for example, we use XRP as a digital asset which is designed and fine-tuned for enormous high speed, immediate delivery of value from one currency to another. I think looking at the way the world is emerging and also the acute need to build financial inclusion very quickly into the 21st century, the payment industry needs to be much more open, much greater reach, and it needs to be able to deliver payment flows in a way that's very different today. Very, very high volume, tiny amounts, on point, absolute clarity. And to do that, you have to create, in our view, an internet of value. Open, connected, inclusive.
So the big points there, internet of value, obviously the liquidity, releasing trapped liquidity. That is exactly what Ripple has been striving for. And, even from this World Economic Forum page regarding Ripple, Ripple is doing for value what the internet did for information, enabling its instant and seamless flow around the world. Ripple calls this the internet of value. So when we look at these press releases like this one, for example, that just came out this month, August 2023 from Cyprus Demand & Core here, A Bridge to the Future, Hong Kong FinTech Promotion Roadmap. Now we know recently Ripple did partner up with Hong Kong, the Hong Kong Central Bank, to create a CBDC. There was also some talk about leveraging blockchain technology for real estate purposes. Here it says by 2025, the HKMA envisions Hong Kong to be one of the world's leading global fintech hubs, a hub that strives for excellence, nurtures innovation, promotes financial inclusion, and fuses the know-how of financial incumbents with the nimbleness of fintech firms to bring the next generation of financial services to all individuals and businesses in the city. So really kind of pointing out the fact that fintech is first and foremost. 2025 is their target date, and that this is happening in Hong Kong. I mean, it is good news because we know Ripple does have strong ties now to Hong Kong, also with England, and England also is wanting to be one of those financial hubs too for fintech specifically. They also mentioned down here, 2022 to 2025, the tech baseline assessment highlighted that adoption rates for wealth tech and invest tech and insurtech solutions among local banks are forecasted to rise by 20 to 40% by 2025. So from 2022 to 2025, green tech adoption will double between 2022 and 2025. So we're seeing a lot of internet of value type topics, more applications being built on the blockchain. And again, this coming from Hong Kong, guys, their fintech roadmap published just this month. So, when we put all this together and we realize what Ripple is doing, what they've been doing for years, it's all really making sense, and we're seeing the real use cases like the other day I was talking about Zago and how they just introduced 6 new currencies, the Australian dollar, Hong Kong dollar, again bringing up Hong Kong there, the Japanese yen, Singapore dollar, New Zealand dollar, and the Bahraini dinar. Crypto Eddie posted this too with a representative from Zago discussing how the company utilizes XRP. Guys, listen to this.
We use mainly XRP, Ripple XRP.
Ripple, yeah.
But we do it for a good reason. It's very quick. And the cost of transacting is quite low, or very low. So typically we're only in crypto for 7 seconds. That's it.
7 seconds.
7 seconds. That's it. So we're in and out. So you put your rand in, and your pounds out, and it's gone from rands to XRP, XRP to...
The interviewer didn't sound that impressed, but you could tell this guy here, he really wanted to hit that point home that we were only in it for 7 seconds. And, that's the thing. A lot of these companies historically have said they don't want to have that exposure to cryptocurrency because it's so volatile. And, we've heard it from Brad and others in the past. When you leverage Ripple's XRP, because it's such a quick transacting crypto, you're only exposed to that volatility. And here's just another use case where Zago is mentioning that they are in fact utilizing XRP, only exposed for 7 seconds. That's it. You're in and out. So wanted to thank Sento Sumo Saba here on Twitter just for posting that. Wanted to keep moving, guys, because more utility is going to mean higher prices eventually. Panos bringing this up. If passed, XRP holders will be able to earn for the first time income on chain. Now, I'm sure a lot of XRP holders are very excited about the XLS 30 amendment, the AMM, or the automated market maker. So Panos did talk about this recently in a couple of tweets here, retweeting out Krippenreiter's tweet here. Are you ready for the Rippled version 1.12? The following amendment is expected to fixed reduce offers version 1 and feature the AMM or the XLS 30 amendment. And for those of you guys who do not know, this is going to be released, or the scheduled release at least, is September 11th, 2023. So just in a couple of weeks. And to give you guys a bit of an idea of what it is, since the XRP AMM XLS 30 was announced, many people have been wondering about the risks and how impermanent loss works when you provide liquidity. Today is time to discuss this in detail. Now, this was a tweet thread from back in May, but I thought I'd go over it just because this is coming around the corner, guys. A decentralized exchange, or a DEX, is a P2P marketplace that connects cryptocurrency buyers and sellers. DEXs usually utilize smart contracts to enable orders and settle automatically and immediately from crypto wallets without the need for a middleman or custodian. So just giving you guys just a bit of context there. The XRPL introduced the first DEX built in 2012, and it uses on-chain order books without smart contracts, aka central limit order books, or CLOB DEXs. Here are the main differences between AMMs and CLOBs. CLOBs are optimized for trading, while AMMs are optimized for liquidity. And so this is where they differ, and this is where I think they're realizing that XRP can be more efficient in these particular circumstances. With XLS30, the XRPL DEX will adopt the best of these two worlds, introducing a hybrid that will support both AMM pricing and order book pricing. If you want to read more about how that works, he does give some more supporting material here. When you are trading on an automated market maker, you are executing the trade against the liquidity in the liquidity pool. For the buyer to buy, there doesn't need to be a seller at that particular moment, only sufficient liquidity in the specific pool. When tokens are deposited into a liquidity pool, the platform automatically generates a new token that represents the share the depositor owns for that pool. This is called a liquidity provider token, or an LP token. So make note of that. If you provide liquidity to an AMM, you will need to be aware of a concept called impermanent loss, or IL. IL happens when you provide liquidity and then the price of your deposited token changes compared to when you deposited them. The bigger the price change, the more you're exposed to impermanent loss. So this is the slippage, right? But this can be still counteracted by trading fees. This also means that the less volatile an asset is, such as stablecoins, the less the impermanent loss. So with the two stablecoin pairs, the IL could be zero. Let's go through an example, though, of how IL may look for a liquidity provider. Let's say for this example that 1 XRP is worth $1. Bob deposits 100 XRP and 100 USD in a liquidity pool. Bob's deposit is worth $200 in total at the time of the deposit. In addition, there's a total of 1,000 XRP and 1,000 USDC in the pool, which are funded by other liquidity providers, just like Bob. So Bob has a 10% share of the pool, and the total liquidity is $2,000. Let's say that the price of XRP increases from $1 to $4. So guys, you're seeing this play out kind of in real time with this rudimentary example here. While this is happening, arbitrage traders will add USDC to the pool and remove XRP from it until the ratio reflects the current price. Remember that in AMMs, what determines the price of the assets in the pool is the ratio between them in the pool. While liquidity remains constant in the pool, $2,000, the ratio of the asset in it changes. If XRP is now $4, the ratio between how much XRP and how much USDC is in the pool has changed also. Because XRP, right, theoretically can still change in price, this is where it's kind of almost like a mechanism to control that. There are now 500 XRP and 2,000 USDC in the pool, thanks to the work of arbitrage traders. So Bob decides to withdraw his funds. As we know from earlier, he's entitled to a 10% share of the pool. As a result, he can withdraw 50 XRP and 200 USDC, totaling $400. He made a $200 extra profit since his deposit of tokens was worth $200, right? But wait, what would have happened if he simply held his 100 XRP and 100 USDC? The combined dollar value would be $500 now. We can see that Bob would have been better off holding rather than depositing it into the liquidity pool. This is what we call impermanent loss. So giving an example, a real world example, and I got to give kudos to Panos here. He really does break it down, I think, in a way that is easily understandable. This is called impermanent loss. It's important to remember that this happens no matter which direction the price changes. With that said, Bob's example completely disregards the trading fees he would have earned from providing liquidity. In many cases, the fees earned would negate the losses and make providing liquidity profitable nevertheless. Furthermore, with the XRPL automated market maker and its unique features, such as the contagious auction mechanism, IL will be mitigated, resulting to bigger profits for liquidity providers. Overall, the future of the XRPL decentralized exchange seems very promising, and this innovation will open up a world for DeFi users, holders that want to put their capital in and use the ecosystem as a whole. So a very good and very detailed explanation of how this could work. And so, giving a realistic definition too, explaining that, you might not make as much profit as if you were to just hold However, the fees and all that other stuff could add up, and you could in fact be profitable down the road. So wanted to thank Panos just for giving us a definition, giving us an explanation really of this. And I will link this in the description if you guys want to go over it, if it may have still gone over your head and want to just sit down and analyze this a little further. Anyway, wanted to thank Panos once again for providing that information. Michael Branch tweeting this out too, okay? Another topic here that we've discussed in the past, the fact that XRP is like the lubricant, the oil that is going to smooth out this financial system. So this concept was just recently brought up by Digital Perspectives here on Twitter. He did post this in a tweet. My thinking is this: if oil was to underpin the US dollar after the gold standard, oil has utility. The kind of utility that was fueled by the world's growth and supported the US dollar dominance is where it is today. That asset, oil, is in of itself useful. So again, Digital Perspectives brought this up. He compared XRP to the new oil or water of the financial world. He suggested that its application could revolutionize various sectors. The highlighted sectors include small and medium-sized enterprises, financial institutions, banks, central banks, and clearinghouses. You know what this reminded me of, guys? When Martin Valk explained it in terms of an engine and an oil sump. This analogy explains a possible XRP price theory, how the price is going to rise, guys. Again, I did this video in June of 2020. I thought it was a great explanation from Martin. Listen to this. Well, here's what Martin explains with this tweet thread here. So he explains it this way. So many people are fixated on the price of XRP and don't understand why it is not rising. I'm going to try to explain what I believe to be true in a way that can be understood by people who know absolutely nothing about finance. And I think that is important first and foremost. A lot of people in this space have no financial background, and so maybe Martin's analogy can help you out. So visualize the economy as a massive car engine and XRP as the oil that lubricates the whole system, taking away all the friction and making sure everything runs smoothly. Now visualize the oil sump. The oil sump contains the engine oil required for lubrication when not in use at the bottom of the engine. In this case, the sump is full of all the XRP that is not being used. And so for those of you guys who need a visualization, this is a oil sump, just an example of that. It catches the oil that is not being used and it is stored in here until it is ready to be used. So you got to visualize this, okay? Now let's link the price of XRP to the level of the oil in the sump. The more that is moving around the engine, the less that is in the sump, and the higher the price. Simple supply and demand applies here. However, he says, after use, the oil, or in this case the XRP, returns back to the sump, which causes the price to drop back down again. The strength of XRP is its speed, but this is also the price's weakness because it is able to return to the sump before more is needed. So you got to think, XRP is a fast cryptocurrency. When it is needed, it goes through, it lubricates the engine, it does its thing. It makes the engine move, it makes the car move. But when it is not needed, it returns to the sump, waiting for it to be needed at a future time. In order for the price to rise, we need the engine to be continuously running, not just more use cases, but actual in-flight XRP. It needs to be a continual, perpetual motion is what he's suggesting here. XRP unlocking all of the Nostro and Vostro money is great, but that alone won't affect the price, much as XRP is so fast and it's only needed during the actual transaction. Once we get institutional money moving around the world, we will see the engine revving up and the oil, XRP, continuously being pumped around, causing the level in the sump to stay low. So XRP in the ecosystem is what he's suggesting. None in the sump is what he's saying. There'll be so much need for it because the massive quantity around the world will be needed that the 100 billion guys will be all used up. And not only that, for those higher value payments, the price of XRP will need to be higher in order for those types of transactions to be executed. So he continues, as technology advances and continuous streaming micropayments become the norm, the demand for oil, or XRP in this case, will become even higher, driving the price up even more. And a side note, which I thought was brilliant, your car engine uses up a little bit of oil as it is being used, just like XRP has its burn rate, which is true. The only difference is that you can top up your oil every now and then, and there is a limited amount of XRP. This is to drive up the price ever so slightly, but eventually. I hope I have been able to explain my understanding of XRP's price action a little bit, but I would really like to hear from all of you what your take is on this. I'm going to stop it there, guys, but I will link this video in the top right-hand corner right over here if you want to watch the rest of that. Martin Valk, with his analogy, the engine and the oil sump essentially stating that XRP utility is going to come with more use cases, guys. And, this is why it's great to see things like this, the automated market makers, how that is going to rev up XRP utility, all the partnerships too. I mean, Zago, just another one of those use cases, leveraging XRP. But really, the Internet of Value is just beginning. 2022 to 2025, this is where Hong Kong sees overall crypto utility moving. And I think Ripple and XRP will be at the forefront. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.